Hello, good morning everyone. Welcome to my YouTube channel Online Institute of Commerce. Now today we will start cash flow statement. Now what is the meaning of cash flow? Classification of cash flow, objectives, uses, limitation, what is the difference between the cash flow and how to prepare the cash flow statement. We'll learn in that particular unit. Now this unit or this video is divided in 3 to 4 parts. In first part we will learn the basic meaning and introduction. Then in another video we will learn another part of cash flow statement, and in last part of video we solve simple example, and then after we will solve we will discuss the important points of that particular unit. Now let's start the cash flow statement. So first part is the meaning of cash flow statement. Now see, the cash flow statement include the three different words: cash, flow and statement. See, cash is the most liquid assets of a business, and all business transactions ultimately result into cash inflow or cash outflow. Hence, a statement that shows the cash flow is considered to be an important one. So let us start the meaning of cash. Now cash, it means all cash and bank balance. But while we say about the cash flow statement cash, then cash include the cash equitable and marketable securities also. Now second word is used, the flow. Now flow means what? The flow means all of cash from business to economy and economy to business. So for example, cash inflow and outflow through sales or purchase of any assets or issue of debentures or redemption of debentures, right? And that statement, now statement is a pro forma prescribed by Chartered Accounts Act as per the accounting standard 3. So ultimately you can say that cash flow statement is a statement of inflow and outflow of cash and cash equivalent in an enterprise during a specific period of time. So this is what the important thing, specific period of time, say for example 1 year. So you can say that a statement showing inflow of cash and outflow of cash during the last year, and as a result the balance of cash at the end of the year is known as cash flow statement. So another definition of cash flow, it you can say a cash flow statement summarizes the causes of changes in cash position of a business enterprise between the dates of two balance sheet. A statement, a cash flow result of cash at the end of the year, which shows the ultimately result of inflow and outflow. So next important point is what the classification of cash flow as per the accounting standard 3. Now as per the accounting standard 3, cash flow is divided in three different parts. Say for example, first part is known as cash flow from operating activities. Now which shows or result of, you can say that profit or loss, which include the different points now we discuss later on. But the second cash flow is known as cash flow from investing activity, as for example purchase or sale of fixed assets. We discuss again in detail later on. And then third one is cash flow from financing activities, say for example issue or redemption of shares or capital. So let us start with cash flow from operating activities. Now cash flow from operating activities are the principal revenue producing activities. We know that if you purchase or sold, then maximum cash outflow and inflow through that particular activities. So this is known as the principal revenue producing activities. Hence, these are the result of those transactions and the events that determine the net profit or loss. As per example, cash received from the sale of goods, as I told that the main principal revenue generating activity is known as what the sales. So if you sold any goods, then cash is what received comes in your business. Now cash received from royalties, fees, commission and other revenues. Now cash payment, the another main outflow of cash through operating activity is what the cash payment to supplier of goods and services, cash payment to and on behalf of employee, cash receipt and cash payment of insurance and enterprise for premiums and claims, annuities and other policy benefits. These are known as what the main source of cash inflow and outflow of that particular operating activities. Now, the second one or second important activities is known as cash flow from investing activities. Now, investing activities include the acquisition and disposal of long-term assets and other investments not included in cash equivalent. It means you can say that if you purchase any fixed assets, say for example 10,000 rupees land is purchased, then 10,000 rupees cash flow outflow from your business to economy. So this is known as the fixed assets is what the purchase. So you can say that this is known as the investing activities or cash outflow through that particular investing activities. Say for example, if you dispose or you sold any fixed assets, then cash received or cash comes from economy to business. So this is known as cash inflow of that particular investing activities. I will discuss later on in detail when we will solve the examples of that particular cash flow statement. Now another points also included in cash flow from investing activity, you can say that cash, as I told, cash payment to acquire and cash receipt from disposal of fixed assets and cash what we can say received or cash payment. Now third important activities is known as cash flow from financing activities. The separate disclosure of cash flows arising from the financial activities is also the important because it is the useful in predicting the claims of future cash flows by providers of funds. Say for example, if you issue the new equity shares through which the cash comes in your business, this is known as cash inflow from financing activities. So for example, if you issue the preference shares or debentures or borrow any other long-term loan, then through which the cash inflow, and if you redeem the debentures or preference shares, then cash outflow from your business. This activities is known as cash flow from financing activities. Okay.